ArtNet recently launched an art index. Tell me how it works.
The Art Index works essentially by monitoring art market movements on a macro level and on a micro level. We examine particular collecting categories at the top end, and then we break out those categories into their constituents, so the artists that make up that category. And then again, we go on down to a very micro level. We're able to show the performance of individual series of works from an artist's career.
And how does your art index and its subcomponents stack up against the S&P, the Dow, and your stock market indexes?
That's a good question. So the reason why we built these indices was to be able to show the performance of art against financial indices. So advisors could participate in the conversation with their clients about how their art is performing as opposed to how their other asset allocations are performing. Historically speaking, the art market has performed around a year lag time to how the financial indices has performed, the financial markets have performed. And now we're at a point where they are more separate, and the art market is actually outperforming the Dow and the S&P and other indices.
And it seems like a great way, especially for high net worth investors, to diversify their holdings. Now, tell me how it breaks down. Are your modern artists, like your Rothkos and your Lichtensteins and your Warhols, are they more like the NASDAQ as compared to your masters, whether it be a Rembrandt or even the Impressionists like Van Gogh and Cezanne and Monet? Are they more like the Dow and the S&P? How does it break down?
Sure. So essentially, there are always blue chip artists. There are artists who have been traded frequently within the market, and those you could expect certain returns from if you examine their markets historically. There are also artists who are, to all intents and purposes, off the grid, and they are a little bit more like private equity, wherein you may be investing in them before they end up trading on the open auction market. Obviously, the risk associated with each is similar to the way the risk is associated in the financial markets.
So recently, the Munch painting, The Scream, sold for $120 million at Sotheby's. Does this mean there's a bubble in the art market, perhaps? Because that's quite a sum for that picture.
It is quite a sum for that picture, but I think it's a fair sum for that picture. It's a phenomenal work of art, both from the market perspective, obviously, given that it sold for so much, but also from an academic perspective. It's just, it's simply incredible. Whether or not the market is overbought is an interesting question. I think one of the reasons why we created this index is to show how, as I said, financial markets perform against art. And recently, within the past 5 years, it's been difficult to really know where to allocate one's assets within the financial markets. There's been a large amount of volatility. People are looking all over the place at various indicators like the VIX and getting concerned. And they're looking at their walls, at least in the high net worth and ultra high net worth community, and they're saying, this is something I've invested in. I feel comfortable with it. I've had wonderful returns on it. Maybe I should be throwing my money into some more art.
And then finally, what are you going to do with the ArtNet Art Index? Is there an ETF in the future? Can people potentially trade this at some point?
It is something we are in discussions about. If we get to the point where we were to do something like that, we would be simply a source of data. We're not interested in creating the products ourselves, because that's obviously the realm of other financial entities out there. But it is something that's come up. We've been approached about it, and we're working towards doing something similar.
This market is fueled
Stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to